at some point, you've got to be careful what you wish for, because the market, right? I mean, just remember what happened to the 10-year and 30-year bond. It was only like 2 weeks ago, guys, that when these tariffs came out that caused the 90-day pause. Let's be clear. Scott Bessent went to Trump and said, "You've got to give us a 90-day pause. This thing's about to break." If you fire Powell, without question, rates go up. Foreign entities continue to change their allocation to U.S. assets, and it could break the financial system. Alrighty, folks, it is very, very clear, if you listen to President Trump, that it is time to fire Jerome Powell ASAP. Mr. Late is not playing along. Mr. Late is not doing what other central banks are doing, like the ECB and others. Jerome Powell is afraid of the boogeyman, where inflation is going up at some time in the future, where inflation, according to Mr. Trump, is down, down, down. So, Taylor, I want to ask about what you think might happen if Mr. Trump, President Trump, gets his way, fires Jerome Powell, puts in a self-appointed nominee, and just takes over control of the Fed from the presidency. What do you think would happen?
Just puppet masters this whole thing?
Yes, exactly. Just the guy at the top playing it all.
This independent entity and makes it a direct policy nature of the Trump administration.
It's a hardline report. Sits in the cabinet. None of this secondary stuff. Again, Powell out. I forget the name of the guy they want to put in, Kersent or something like that.
Yep.
What do you think happens if you fire Powell?
So the market gets roiled if they fire Powell. Look, ultimately, they say, hey, this is going to be a more chaotic string of events because this is going to be a wild card, just like Trump is, and he's going to beat to the sound of Trump's drum, and Trump can continue to ramp up tariff rhetoric with the backstop of the Fed put that the market has become so darn accustomed to over the past however many years. But we've got a history lesson on this of one president pressuring too much and seeing the result, which was certainly not a welcomed one.
No, you're obviously referring to President Nixon and his encouragement of, at the time, Arthur Burns.
Well put. Well, you're a politician yourself.
There you go. Encouraging Arthur Burns to relent and start to cut rates. And I've tried to educate my audience on that. We talked about that last Thursday and again on Sunday. And if you look at the charts, Nixon got his way for a moment, and then it got really, really ugly.
And then inflation got its way.
Yeah, then inflation won.
and then Volcker comes in, right, and rips interest rates higher, and it winds up being massively detrimental at the end of the day. Now, I think that there's different forces at play here. Oil was the massive driver in the 70s, and it won't be this time around. It's not to say that we can't feel pressure if we were to get some sort of oil embargo from the Middle East, but I don't think that's in the cards right now. And I also just, with our more energy independent stance that we're in now we are a net exporter. It's not to say that we're oil independent, because we export a certain type of crude and oil that is used in certain places, and we import the rest that we need to sufficiently run our country. So it's a little bit of a wonky game there, but yeah, the oil wild card is largely out of the way, which was what caused the 1970s to be so nasty.
Yeah, there's no question. But, one of the things that I think about as the rhetoric between Powell and Trump escalates, and really, let's be clear, it's initiated all by Trump.
Oh, it's all one-sided.
It's all one-sided, yeah. Well, let's not be clear. I think Powell has done a fair amount of speaking to purposely, put his finger in Trump's eye. So
fair.
Fair.
No, you're totally fair. You're totally fair. It's one passive-aggressive and one aggressive stance.
Yeah, exactly. But here's the deal. I mean, at some point, you've got to be careful what you wish for, because the market, right? I mean, just remember what happened to the 10-year and 30-year bond. It was only like 2 weeks ago, guys, that, when these tariffs came out that caused the 90-day pause. Let's be clear. Scott Bessent went to Trump and said, "You've got to give us a 90-day pause. This thing's about to break." If you fire Powell, without question, rates go up. Foreign entities continue to change their allocation to U.S. assets, and it could it could break the financial system. Just
Yeah.
point blank.
Well, it's interesting to see kind of the change of course, because at one point they were saying, all right, we're not going to beat up Powell to reduce rates, because when we reduced rates last year, you actually had the 10-year bang higher. And the market said, okay, well, if there's, freer money in short term, people can spend money on credit cards and not have such an arduous debt rate there. And therefore they'll spend more and it'll actually drive further inflation. Now they've completely whipsawed and said, all right, that was our thesis before. We don't need lower rates because, potentially that does not bring down the 10-year, which it doesn't. And now they're saying, well, I don't know where this reversion of course has come from, but it's an interesting who's playing chess, who's playing checkers. That was the big argument before. Trump is playing chess and everyone else is playing checkers, but I don't know.
Well, again, I'm glad you brought that up, because there's really 2 points about firing Powell. One is the unintended consequences of getting exactly the opposite of what you want. Rates would rip higher, dollar would weaken, the confidence in the U.S. Economy would waver. Our friends and foes would basically be going, "What the hell is going on over there? We're going to have to move. It's too risky to be highly allocated to the U.S. assets," and you would see more selling, which would be exactly the opposite. The other thing you brought up is we've been here before, right? The Fed has cut 100 basis points, folks. That's 4 cuts. They did it in 3 times, a 50 and 2 quarters, and the 10-year went up. So who's to say an emergency rate cut this afternoon doesn't send the 10-year higher? You can't make those connections. So what is likely going on, in my opinion, is President Trump realizes this tariff kerfuffle is not going away. It's dominating the news, and he's trying to insert something else to, buy time.
Right.
And, I think that's just hey, look at this shiny object over here. Don't be distracted by the car crash over here. Look over here. So I that's all it is it's a press game. It's a headline game. He's trying to get the narrative off the car crash, which is the U.S. economy.
Which is interesting to me because we're negotiating with 75 countries is the number that's being tossed around, right? And the really important part is that we don't have a win yet in one place. And so as soon as we get a win, they're going to be out just waving a flag saying, look what we've done. Italy did come to the table. Nothing's been announced, but they said they are looking to make a deal. As soon as we get a win, we're going to be out there saying, this is the easiest game in the world. We're going to win all of this. Tariffs are going to be a great end result. We got nothing yet. And we got 90 days is essentially what they initially said we have to figure this out until these reciprocal tariffs, which we all know are not reciprocal at the end of the day, get reinstated. And so it's a scary thought to think about how long this thing could drag along.
Yeah, it's funny. I don't know if you agree with this statement, but something I told my audience, and I think it was the title of my yesterday's daily financial news, is I actually said this is a make or break week for Trump. He's got to change the narrative from all negativity and doom to, hey, we got to win. Right? He's got to put that flagship first win on the board, because it's just like sales. The first deal, the first thing is always the hardest. Right. And then the others follow. So I said it's a make or break week for Trump. Again, that puts a really tight time box on it, right? 5 business days. Do you think that's too tight? Do you think he's got a couple of weeks, or is this U.S. economy slipping away and it could get ugly fast?
No. And even when you look at it from my angle, which is more of the market's angle, it's like stocks are still expensive relative to long-term norms, and they're going to continue to bleed downwards as this thing continues to drag out. And the rhetoric with China is just getting escalated further and further. China has now stepped back and said, we're going to start to then go back at countries that say that they are going to try to evade and work around to partner with China and not, loop in the United States. Now they're going to go back at them. And this is like becoming an East versus West battle.
Yeah, this is very much, reminiscent of the Cold War between the U.S. and Russia, which was obviously very military based and all of that. This is not a hot war, thankfully, but it is a war nonetheless, trade war, whatever you want to call it. This is not over.
I think it all goes back to what we talked about and kind of pounded the table on last week. We need better messaging, because you think about, 3 potential desired outcomes that have been floated by the Trump administration. One is just, create fairer trade and, potentially correct bad behavior, whether it's immigration, whether it's fentanyl, whether it's, Europeans, overregulating cars coming in from the United States differently than they do their own cars. So that's just like a bad behavior thing. And so that's probably your quickest resolve. But on the other side of the note, it's like even that quick resolve, the USMCA between three countries, the US, Mexico, and Canada, took 2.5 years to pencil out. Now we're working on 75 countries. So how quick is that? I think it's the quickest one to kind of correct, but it's still not a short game. Second one is we're looking to actually bring in tax revenue from foreign entities. And that is a forever game, right? So longer the period of time that the tariffs are on, the more potential tax revenue we can create based upon it. And the third one is bring jobs back to the United States. And that's a game of long-term
years.
Yeah. So it goes from, short, which probably isn't that short, to get actually 75 deals struck with individual countries, to forever being if we're actually going to use this as a tax generation source. And the third one is reshoring jobs. I don't know. And nor does anyone else. Let's be very clear on this. Like, what is the primary goal of this? No one is clear. And that is at the fault of the administration right now.
No question. At the end of the day, I believe firing Jerome Powell in a moment of anger, disappointment, whatever you want to call it, would roil the U.S. economy, the financial market, and actually produce the exact opposite of what President Trump is looking for. Do you agree with that statement?
I do. I think Jerome has actually been a very modest, reasonable person, a voice of calm in the market. Yes, transitory was the worst word he ever used, and made a dumb mistake of letting it come back out of his mouth.
I can't believe he did
that. We laughed and talked about that. But yes, he was too late to raising rates. There's no doubt about that. But I think he's done a pretty decent job at the end of the day over the past couple of years. I do tend to think that we could afford a rate cut. That's a personal kind of opinion. I think that the bigger problem right now is not inflation. It's actual global demand. And therefore I think that the economic weakening is a bigger issue for us than inflation. So I tend to agree with Trump that we could cut rates right now. That being said, firing one of the few voices of reason in DC is not something that the market will take kindly.
Yeah, I'm glad you brought that up, your opinion on a rate cut, because I'm actually starting to warn my audience that I think deflation is the greater risk midterm, right? If you think short term, the next 30 to 60 days, I don't think there's any question that tariff will have that dreaded word, a transitory impact on cost, right? But it's going to be so short term, because I think we are seeing consumers, investors, businesses pull back in ways very reminiscent to early pandemic. And that vacuum of demand, aka demand destruction, will likely cause inventories to build and then prices to be cut. So I suspect by August, September, October, we are going to print deflationary numbers. And do you see deflation in 25?
It wouldn't shock me. And to be clear, deflation sounds like a good problem because prices are high. It's the worst problem an economy can ever face. Ask Japan if you don't believe us.
Yeah.
That was the scare that did not allow Jerome Powell to raise rates more quickly on the front end, because he said, like, if you remember, I can't remember all the vernaculars, the beta variant, the this variant, the that variant of COVID. That was the big fear in the market. And if he raised rates and then we got whacked with a different strand of COVID that we all didn't understand at that time, and it started to decimate things on that side, it could have been a deflationary spiral. And that was what caused him to be very cautious on the front end. And maybe he was too cautious on the front end raising rates, and maybe he's going to now be too cautious on the back end. But I still don't think it warrants a firing of an independent entity chairman.
Yeah. Folks, at the end of the day, it is my opinion, and it sounds like Taylor's, that firing Jerome Powell in haste would produce the exact opposite of what the administration wants. Taylor, where can people find you?
Yeah, follow us on social media, on Instagram, on TikTok, on LinkedIn. We're at Life Goal Investments on all of them, and doing 60-second clips a day explaining what the heck's going on out there, because it's noisy.
Folks, at the end of the day, I have no idea how he gets 5 minutes of content into a 60-second clip. I don't know. It's some kind of AI artificial genius crap. But go follow him. Check it out. Let me know what you think. Thanks, buddy.
Appreciate you.